Now we will take a moment to introduce you to our speakers. William Love is an assurance manager in our Grand Rapids Public Sector Services Division with over 20 years of public accounting experience serving on audit engagements for various counties, cities, public schools, not-for-profit organizations, road commissions, and other specialty governmental entities. He also specializes in federal award compliance auditing and contributes to outsourcing engagements for several public sector clients. Paul Matz is a principal in Muskegon with extensive experience working with local and intermediate school districts, counties, cities, road commissions, and a variety of not-for-profit organizations. Paul began his public accounting career in 2001, and he is licensed as a CPA in both Michigan and Florida. He also serves on Rehmann's Public Sector Audit Quality Control Subcommittee, ensuring compliance with technical standards and firm-wide consistency. Doug Dieter is a principal in Saginaw with over 20 years of experience providing assurance and consulting services to tribal governments and casinos, cities, counties, intermediate and local school districts, townships, community mental health authorities, and not-for-profit organizations. As a thought leader in the industry, Doug also leads training courses internally at Rehmann on new governmental standards. Like Paul, Doug also is a member of Rehmann's Public Sector Audit Quality Control Subcommittee. William, you may begin the presentation.
Good afternoon, everybody. Jump right in here. First of all, just kind of walk through an outline of what we're going to look at today. I'm going to take us most of the way through the components of a single audit. Obviously, whenever we have updates, we always have to begin with the dreaded overview. So that will be mostly what I'll be doing today. We're going to move very quickly through quite a bit of information. Then Paul's going to take over and talk about the uniform guidance. And then following up that, we'll talk about COVID-19 program and funding updates. So a lot of material to get to, so let's jump in. But before we jump right in, we're going to get to the first of our polling questions. Okay, that's closed up, everybody. Let's jump right into the slides, actually. Okay, the components of a single audit. I'm assuming most of you folks out there at least know what a single audit is. So like I said, we're going to go pretty quickly through this overview because a lot of this material could be its own presentation separately if we were to go into detail. First of all, it's important to understand that a single audit is not a standalone engagement by itself. It always goes along with a financial statement audit. So if you're doing a single audit, there must first be a financial statement audit, and that audit has to be conducted in accordance with Government Auditing Standards, also known as GAGAS or the Yellow Book. I will mostly refer to it as the Yellow Book as we go through here today. And then, of course, there's the separate compliance audit of federal awards expended, and that's governed by the Uniform Guidance 2 CFR 200. Which we'll talk quite a bit about as we go through the presentation this afternoon, again, in more an overview fashion. As we know, a financial statement audit really is focused on, obviously, the financial statements, results in an opinion on whether the financial statements are fairly presented in accordance with generally accepted accounting principles. No mention of anything to do with federal awards here. We're just talking about the financial statement. The Government Auditing Standards piece, the Yellow Book piece, builds on the foundation of what you would normally do in an audit. We have standards that are set by the AICPA that we auditors have to follow when conducting any audit. The Yellow Book standards add to that and relate. It's kind of confusing sometimes. Government auditing standards are not necessarily just for audits of government, but they're for audits of entities that expend government funds or that have government type relationships. In other words, public money, public trust type of a background. So you can see government auditing standards for governments, also for school districts, also for nonprofit organizations in certain cases. This result that when you apply government and auditing standards, we are required to report on, remember, this is not an opinion, on matters related to internal control over financial reporting that come to the auditor's attention during the audit. Important to remember that the yellow book report is not an opinion on internal control, but a report on internal control, and only covers internal control over financial reporting. A lot of times that will appear in a single audit packet, but it really is not related directly to the single audit. And then the compliance audit of federal awards, which is really what we're here to talk about today, is compliance testing for audit major programs. And we'll talk about a little bit what that means a little bit later in the presentation. And that results in an opinion on major program compliance. So the programs that are audited as major, you will get an opinion on compliance. Another part of that report will be a report on matters related to internal control over compliance that came to the auditor's attention during the audit. This report is similar to what we talked about last slide with the yellow book report, but it is related to compliance. There are internal controls over your financial reporting that have to do with what numbers and disclosures are reported. These are internal controls that you have in place to make sure you comply with the federal award standards. And of course, an opinion on the schedule of expenditures of federal awards, or the CFA, in relation to the financial statements. The CFA has to be able to be reconciled to the amounts that are in the financial statements. And with that, you get an opinion that states basically that your auditor has found the CFA to be fairly stated as long as it's presented with the financial statements. Not necessarily separately on its own, but as long as it's presented to and in relation to the financial statements as a whole. Okay, let's get a little bit into the uniform guidance. Again, there's a lot of material in here, a lot of stuff to cover. We're going to go fairly quickly. Uniform administrative requirements, cost principles, and audit requirements for federal awards. The important thing to remember about uniform guidance is this used to be, if you notice at the bottom here, all these little circulars that came out of the OMB were the guidance that auditors had to follow and recipients of grants had to follow in order to comply with the requirements of the grant. And what uniform guidance did is it actually codified all of this stuff. It simplified it, kind of streamlined it a little bit, and it codified it into the Federal Register. So it has now the force of law. So there used to be 3 different sets of circulars. One was administrative requirements. Those were just general kind of what you needed to be able to do in order to administer a federal award. There were federal cost principles, 3 of them, which were aimed at when you spend money, this is how you're supposed to spend the money and how you're supposed to document how you spent the money. And the 3 principles were separately identified for nonprofits, governments, and tribal governments, and institutes of higher education. And then the single audit was governed by Circular A133 with a little bit of A89 and parts of A50. But mostly it was focused on A133. So along comes the uniform guidance and puts this all in one place. Now, your basic overview of what's in the uniform guidance, we're going to talk about a few of these in detail, but it's important you know what parts include what pieces that you need to know. Part A is simply acronyms and definitions, and it's lots of them. Not necessarily for casual reading, but if you want to know the definition of something, most likely you're going to find it in section A. The general provisions are a lot of what was included in the administrative requirements circulars that we saw back here. A lot of that administrative requirement stuff is going to be in the general provisions. Section C is pre-award requirements and then contents of federal awards. And most of that covers what you need to do as a recipient before you actually get a federal award or in order to obtain a federal award. So it talks about application processes and things like that, and systems you need to have in place before you get the award. Standards for financial management talks about the systems that you need to have in place in order to administer an award. We're going to look at that in quite a bit of detail coming up here on the next few slides. Section E talks about cost principles. Now you'll notice there's only one section for cost principles. We've taken the 3 circulars for the most part and condensed them into this one section. When we look at the appendices though, you'll see that they did keep some parts separate for different types of organizations. And then the section F talks about the audit requirements. And again, we'll look at that in a little detail in a few slides. Okay, and also there are several appendices. You will notice quite a few of these, 3, 4, 5, 6, 7, and then 8 as well, and 9, all talk about different aspects of cost principles and special situations. We've kept the indirect costs separate for higher ed and for nonprofits in parts 3 and 4, because those entities traditionally do their indirect cost plans differently. So it's a lot of these sections do have to do with different types of indirect cost plans. Not going to go too much into detail in these today because, like I said, those could be separate presentations all on their own. We're here for updates and not detailed dives into more of this stuff. Section 10 talks about the data collection form, which is an electronic form that you have to submit at the end of the audit. And then section 11 talks about the compliance supplement. OMB puts out a supplement every year, which discusses the types of compliance requirements that auditors are going to be responsible for auditing. It used to be a pretty good source for recipients to look at what their compliance requirements, but they kind of pared it down so it's a little less reliable or a little less inclusive as far as that goes for finding all of the compliance requirements for a particular grant. Okay, so let's talk a little bit about subpart D. Recipients are required to do a certain amount of things in order to administer a grant. In some cases, a lot of things. We have to comply with all of the requirements of the award. And you ask, what are all the requirements? Well, the first place you're going to want to look for that is going to be your grant agreement. Grant agreement will usually contain a good portion of what you need to comply with. The other good source to go to if your grant agreement does not answer your question is there may be legislation that's referenced in the grant. You may have to look there. The other place to go, that's almost always a good place for specific questions, is go right to your grantor agency. Usually you got a grant contact in there. Find out who they are, contact them with specific questions. Always good to get it in writing if you can, but verbal is better than nothing. So those are the 3 areas you're going to get that. Performance measurement systems are required because grants have performance requirements. You have to serve a certain amount of people. You have to provide a certain number of services. Whatever the performance requirements are of the grant, you have to have a system in place to be able to track that and report on it. And then finally, financial management systems. Can you separately identify the costs that you charge to a particular award? Can you produce from that separate identification complete, accurate financial results? You may keep it in a separate fund for the costs and revenues related to a particular program. You may, or more likely, you keep it in a specific cost center so that you can generate reports from time to time to report on those expenditures and to provide support for your federal draws. We always recommend as auditors that when you go to draw funds down, that you produce a general ledger detail and attach it to that federal draw for support. Why do it at the time that the federal draw is being made? Simply because your general ledger detail changes. People void checks. People go back and change. Transactions are reversed or changed over time. And you want to make sure that over time you can support the amount that you drew. And of course, effective control and accountability. You want to show that you're tracking, show that you're keeping tabs on what you're spending the money on. The other part of this piece is written procedures. And we're going to get into that in detail here in a slide or two. Okay, written procedures. Of course, auditors and the feds and the grantor agencies all recommend that you have written procedures for all of your compliance areas. However, the uniform guidance does require written procedures. They don't require written procedures for all compliance areas, but they are required for these particular areas. You have to have a policy on payments, cash draws, how much you're going to draw, What happens if you can get in advance? How are you going to make sure that you spend that down timely? You have to have a procurement policy, including a conflict of interest policy. And we'll talk a little bit more closely about that one in particular in a couple slides. Allowability of cost. How are you going to determine for a program what the allowability of costs are? You have to have a compensation policy, both personnel and benefits. And that's going to have to include how you allocate your personal cost, personal service costs, and that amongst different programs. And then, of course, you have to have a travel cost policy. These 5 areas are required by the uniform guidance. Okay, let's talk about internal controls. This is another standard here in subpart D. You have to have an effective internal control system. Okay, federal awards, it has to provide reasonable assurance that non-federal entities manage the awards in compliance with federal statutes. So remember that this doesn't just cover your internal controls over your numbers, but also the internal controls that you put in place over compliance, including your written policies that we just talked about. So yeah, those are compliance policies and they need to be treated with the same type of care and assurance that you give that your financial policy. They're 2 separate sets of policies, but they're both subject to the same basic sets of standards. Okay. They should be consistent with COSO. COSO, of course, is the committee of, I forgot what that stands for. Sponsoring organizations. That's right, Committee of Sponsoring Organizations. And that's the traditional guidance for how to put together an internal control system. But it also has to be consistent with the Green Book. The Green Book is a book that's put out that defines what internal controls are for the federal government. We're looking at a little bit of a contrast in the next couple of slides of these 2 particular books, and you're going to see there's quite a bit of similarity. One might say they're almost identical, except for the color. So here's the COSO framework laid out. And we're going to focus our discussion on this face here of the cube, the different layers of internal control. But remember that these internal control layers are going to affect operations. They're going to affect your reporting and your compliance. These are the goals that your internal control systems or your objectives that you're looking to get out of your internal control system. And then it affects your entity at different levels. So 3 objectives, 5 components. There's your objectives, there's your components, and 17 principles that go within the, we're not going through these piece by piece. If you look at then the Green Book laid out, looks pretty much like the same thing. 3 objectives, 5 components, 17 principles, same exact objectives. Okay, so let's look at the layers here of the different principles. Okay, the first one, and some might say the most important, is the control environment. This is the overall layout of the entity and how you treat internal controls on an entity-wide level. And it contains 5 different principles. Mostly this is what we call the tone at the top. Okay, we have to demonstrate your commitment to integrity, oversight responsibility, make sure you have a structure authority level, some kind of an organizational chart that knows, so people know who they report to and managers know who they're responsible for. Has to, in the long run, enforce accountability. Make sure that we're following up and keeping the right people in the right places and the right processes in the right places. But somebody's got to be in charge of that, and that's the environment. Okay, risk assessment has a big long definition about a dynamic and iterative process. I can't even say that. But really what we're going to ask here in risk assessment is what can go wrong. We know our objectives, what we're trying to achieve. We're trying to achieve compliance. We're trying to achieve accurate reporting. We're trying to achieve efficient and effective operations. But what can go wrong while we're trying to achieve that will cause us not to achieve those? That's really the whole goal of risk assessment, is to write down and say what can go wrong. And then we take the next step, which is control activity. The control activities say, okay, we found back here what could go wrong. What are we going to do to mitigate those risks? Here, this is very important. Not all of your risks are going to be able to be fully mitigated. There are some things you just can't mitigate. Your job with the control activities is to mitigate to the best of your ability when applying a cost-effective decision-making process, mitigate those risks to the best of your ability. Important to remember that control activities have two facets that are very important. One is the design. When you look at the control environment, that's where the design happens. Managers and people who oversee processes are going to design internal control. Implementation of the internal control happens at the program level. Now, it's not that the folks that design it are not involved. They have to determine who gets to implement the control activity, but the actual implementation is done by program staff. So controls can fail in two different ways. They can be poorly designed, or they can be adequately designed and poorly implemented, or you can have both. So you really have three ways that a control can fail. Okay, so after we've designed and implemented our controls, now we get into the information and communication stage. Now that doesn't mean that the information and communication stage doesn't start here. That it starts here. This is where it becomes its most vital. Communication is going to happen throughout this entire process. Communication between upper management, between program management, and between program staff is very important. And the information you're passing back and forth will help you through the design and the implementation. It'll help you through your control activities, will help you through your risk assessment. Program staff may be the only ones implementing it, but they're also the ones that are closest to it and can assist with telling you what went wrong. So information communication, while it's important once you've implemented, is also important throughout the entire process. The final part of the process, at least the bottom rung of the square or the cube, is monitoring activities. Once you've implemented your internal controls, you're going to take the information and communication that is generated from the processing of the internal controls, and you're going to apply it to a decision-making process where we determine, A, did we miss any risks? Did we find something else that went wrong that we didn't count on? In which case you're going to go back to the risk assessment stage. The other question is there a problem with the internal control? Did we design an internal control that's not being implemented properly because we don't have the right systems in place to properly implement it? We don't have the right personnel in place. Was the control designed improperly for the systems we have in place? There's a lot of decisions that have to be made. And then you go back to the beginning and say, okay, how do we fix this? So it's a constant process. So I would say, I'm going to flip back a couple of slides here, that this whole process is a cycle. But once you monitor, you don't necessarily go back to the beginning and go through these again. You may go back to here. You may go back to here. You may go back and find out you're not getting appropriate information. So important to know that while we put these in some semblance of order, they don't necessarily function directly in that order. They all feed off of each other. So that's how COSO and the Green Book, where your internal control system should take all of these steps into account and make sure that there's a process for them to interact with each other. As kind of an overview square here that talks about the difference between entity-wide controls, in other words, controls that are done basically at the upper management and management level. And as you would expect, control environment is more that than it is program specific. Down to the program specific controls, and those are the ones that are actually done by the program staff. The different areas will have different focus. Obviously, your control activities are at one end of the spectrum where they're almost always program specific, and the control environment is almost completely entity wide, because you're setting an atmosphere for the program staff down here to follow. And you're hoping that they pick up on it and that they communicate that to the people that may work for them. Okay, continuing on through our discussion of standards for financial management. Other major provisions of subpart D are discussions of payments, grants, draws, and advances. It's important to remember, and this reflects back on our discussion earlier about written policy, that if you have a grant that allows you to take advances, If you don't have a policy in place to discuss how, and a written policy in place to discuss how those advances are going to be spent down in a timely fashion, then you are forced to treat that grant as a cost reimbursement, and you cannot take advances even though the grantor agency or the grant agreement may allow it. Okay. We talks about cost sharing and matching. Some grants have matching that you have to match with non-federal funds. So the entity has to bear some of the burden of the cost of the program. Some grants actually produce program income, and there are requirements for how you account for that and what you have to do with it once you have it. If there are budget revisions to the grant, usually that'll be in your grant agreement, but there may be other places that you're required to find what budget agreements. If you're going to change the budget, do you have to get prior approval in order to do it, or can you swap between particular categories? There are property standards for property that's purchased with federal awards, and a big section, a lot of discussion of subrecipient monitoring. Sometimes your grant is passed through to other agencies, and there's requirements for you to follow up with those agencies to make sure they're following the compliance requirement. And also this is a set format for the procurement standards. Okay, states have to follow their own policies and procedures, so they have a little different requirement than most of your non-state recipients. All others must follow the general procurement standards. They have to use documented procurement procedures. You have to have a written policy and follow it. You have no conflicts of interest, which you have to have a written policy for that as well. And you always have to consider the most economical purchase option. That's really one of the biggies here. So all procurement transactions must be conducted in a manner of providing full and open competition. And you have three methods at your disposal. If this is a purchase that's less than $10,000, it's a micro purchase. It means you don't have to document how you considered it, that you just have to make sure that you document the purchase and what you spent the money on. The simplified acquisition threshold is $250,000. Anything between $10,000 and $250,000, you have to be able to demonstrate that you at least got some kind of quotes to make sure you're using the most productive or most efficient option. Anything over $250,000 then has to be done with sealed bids, competitive proposals. There are provisions for non-competitive proposals for sole source documentation, so sole source purchases, but you have to make sure that you follow the procedures that are listed in subpart D. Okay, federal cost principles. Again, we're going to flip through this very, very quickly because it's important to remember this is actually its own presentation all by itself, which I've done before. A total cost of a federal award, this is an important thing. If you don't remember anything else out of this, remember this, is the sum of allowable direct and allocable indirect costs, less any applicable credits. Kind of like the old formula where assets minus liabilities equal equity, which of course doesn't apply to governments anymore, but that's another discussion as well. The total cost of the award is allowable direct plus allocable indirect costs, less any applicable credits. Okay, what is an allowable cost? Again, a lot of discussion here. It has to be necessary and reasonable. What does reasonable mean? That depends on the entity that you're being reasonable for and what the cost is. A good example of that is if you can go to a conference and it's applicable to the program, and you can either go to it in a place a couple towns over, or go to it in Hawaii. Can you choose the one in Hawaii and still be considered reasonable? Probably not. It must conform to any limitations and exclusions set forth in the principle, and it has to be consistent with your own policies and procedures applied uniformly to both federally and non-federal activities. So that's important to remember. Allowable costs also have to be accorded consistent treatment. You can't treat it direct in one place and indirect in another. You have to determine in accordance with generally accepted accounting principles. You have to not include it as a cost or used in meeting cost shares or matching requirements of any other federal. In other words, if you charge it to a grant, you can't use it to cost share or match in another grant. And it always has to be adequately documented. You can't emphasize that one enough. If you have a cost that meets all of these requirements, but you didn't document it adequately, then it's not an allowable cost. Okay. Compensation is almost always allowable if it's reasonable for services rendered, if it's determined to support and supported in accordance with standards of documentation for personnel expenses. That's mostly going to be determined by what your written policy says. There used to be requirements in the old circular for specifically what you had to include as documentation, but now you have to make sure you follow your policy. All right. You have to keep records that accurately reflect the work performed. Okay, you have to have a system of internal control. You have to make sure that it encompasses both federal and non-federal activity. And you have to show how you're distributing wages amongst your various activities. Okay, budget. It's important to remember that budgeted estimates are not alone sufficient unless you follow these requirements. Usually, the biggest requirement is if you're going to use a budgeted estimate to charge to the grant as you go, you better have some kind of a system in place to track it actually and make sure you're comparing the two to make sure they're not significantly different. Okay, the last part, sub-F of sub-F talks about the single audit, and we've kind of covered this already. It really says that it starts with a financial audit conducted in accordance with both generally accepted auditing standards and the yellow book, and then it adds the requirements for testing compliance. But that we discussed that way back on the components. And with that, we're going to our next polling question that Ashley will put up now. And I'm going to pass the torch to Paul.
Great, thanks, Will, and good afternoon, everyone. So I'm going to transition over to walking through the different processes and the different steps in connection with the completion of a single audit. And there's really 4 primary stages to think about as part of the single audit process, starting first and foremost with determining the need. Is in fact a single audit required for this entity, or do they not meet the quantitative thresholds for needing a single audit? The next step then being which programs are going to need to be tested as part of the single audit. So we consider those and refer to those as major programs, and we'll talk through the process for determining which programs need to be tested and what the thought process is behind making those selections. The next step in the single audit process is for those programs that are determined needing to be tested. The auditor will test the compliance over the particular compliance areas and looking over the grant agreement as well. But the auditor also looks at the system of internal controls, as Will walked through earlier, to make sure that there's programs, there's systems of internal controls in place to make sure that the design and the operation of the controls are appropriate for the particular major program. And then based on all of that work that's completed, there is reporting that's conducted as well that summarizes both the results of the financial and single audits. And we'll talk through the different components of the reporting as well. So first and foremost, again, is determining the need for, is a single audit even required for this particular entity? So step number 1 is to obtain a schedule of expenditures of federal awards, what's commonly referred to as the CFA, that the client will put together, listing out all of the different federal awards, indicating the program name, the assistance listing information, and the dollar amounts that are spent under each of the different programs. The auditor will then take that information and consider whether the total expenditures for the year equaled or exceeded $750,000 in federal expenditures. If it's above that threshold amount, then in fact a single audit will be required for the fiscal year. If you're fortunate enough that it doesn't quite hit that mark, then a single audit would not be needed. Will talked a little bit earlier that one of the reports that the auditors will issue is a report on the CFA in relation to the financial statements. So certainly the auditors will test that document to make sure that it's complete, that it's accurate, to be able to support that opinion, because certainly that $750,000 amount is something the auditor is going to want to make sure is complete and accurate. The next step then in the process, once the CFA has been obtained, is to determine the major programs that need to be tested. So essentially what the auditor is going to do is to take that schedule of expenditures of federal awards and consider it by each of the different assistance listing numbers. They will then consider those assistance listing numbers and break those out between type A and type B programs for each of those assistance listing numbers. The general threshold for what constitutes a type A program is the same threshold for what's determining even the need for a single audit. It's that same $750,000 mark. Now, it can be higher than that amount if the CIFA is large in terms of dollar amounts. Then the threshold for the type A programs could potentially be more than $750,000. But that's the typical baseline, and the baseline that we'll use just for discussion and example purposes here for determining type A programs. And then essentially a type B program is anything that's less than that $750,000 mark. So then the first step, once the CIFA has been broken down between those type A and type B programs, that the auditor is going to risk assess all of the type A programs. Again, those that are above that $750,000 mark. Any program that is considered not to be low risk, so there's a particular factor that makes it so that it does not qualify as being a low risk program, that is automatically going to need to be tested by the auditor. So those are not a whole lot of judgment goes into that. It's pretty straightforward criteria to determine whether the program is low risk or not. And if it's not low risk, then it's going to be tested. For a program to meet the low risk criteria and potentially not need to be tested, it needs to have been audited within the previous 2 fiscal years, and there cannot be any material findings related to that program for the year it was most recently tested. So if it meets those marks, it's considered a low risk program and it can temporarily be set aside. Just one other item to note on this slide is it does note in that first bullet point a reference to clusters. And there are some instances where different programs have different assistance listing numbers, but they're so similar to each other that the agencies and the OMB have combined them into a single cluster for purposes of testing for the single audit. So you may have 2 or 3 assistance listing numbers that they're really all tested together and grouped together for the purposes of considering major programs to be tested. So once it's been determined whether there are low risk type A programs or not, the next step would be to potentially risk assess some of the larger type B programs. And again, those type B programs are the ones that are less than the $750,000 mark. This is only required if there is at least 1 or more low risk type A program that we talked about on the previous slide. If there are no low risk type A programs that are noted, then the auditor doesn't need to perform this risk assessment over the type B programs. And the auditor doesn't need to consider all of those type B programs. They only need to look at the larger type B programs. And that threshold for being considered a larger program is 25% of the type A threshold. So if the type A threshold is that $750,000 mark, you're looking at about $187,000 for those type B programs that would need to be looked at. So the auditor will perform a similar risk assessment process on those type B programs. There's a little bit more auditor judgment involved for the determination on the type B programs, whether they're considered high risk or not. But as the auditor goes through that process, essentially they're going to have to test 1 high risk type B program for every 4 low risk type A programs. So 25% of the total low risk type A programs. So with that, just that 25% mark, there's not typically a significant number of type B programs that need to be tested. So once you've gone through the process of determining those type A programs that need to be tested and the type B programs that need to be tested, the auditor needs to make sure that they've hit sufficient coverage over the total expenditures on the CIFA for those major programs that are going to be tested. The general requirement is that 40% of the total expenditures on the CIFA need to be tested as part of the single audit. But for a low risk auditee, that percentage drops to only 20% of the CIFA needing to be hit for coverage as part of those major programs. And for an entity-wide to be considered a low-risk auditee, they would have needed to have a clean single audit for both of the 2 previous fiscal years, so no material findings. And the single audit would have needed to be filed on time with the Federal Clearinghouse. And so this is where we talked, first on those type A programs that if it's considered low risk, it likely may not need to be tested. This would be the situation where the auditor would potentially pick up one of those programs if sufficient coverage was not obtained through looking at those high risk type A and type B programs. So once again, it's a significant, very important process on determining those major programs, which is why obtaining a CIFA early on in the fieldwork is so important. But once those major programs have been identified, the auditor is then going to test the compliance of those federal awards. And also look at the system of internal controls again to make sure that it's designed and operating appropriately. So for each of those programs that the auditor is testing, they're going to determine which of the specific compliance areas need to be tested. They will look to the compliance supplement, which is a document that we'll spend several minutes working through in detail. But look at the compliance supplement to see which areas have been identified as being subject to audit. But even if an area has been considered subject to audit per that supplement, the auditor needs to also make sure it's applicable to the auditee. So for example, the compliance supplement could indicate that eligibility is a compliance area that needed to be tested, but perhaps the entity is not even responsible for determining eligibility criteria. And in that case, it may simply not be applicable to the auditee, and that would be an area then that didn't need to be tested. But also even, the auditor is even going to consider whether a compliance area has a direct and material effect on compliance. There may be a grant that's 98% payroll costs and just 2% other disbursement types. And in that case, the auditor may determine that those compliance areas that cover the non-payroll disbursements with just being 2% of the total grant, while it may be applicable for the compliance supplement, it may be applicable to the auditee, it just may not be considered direct and material and need to be tested. This is the laundry list of the compliance areas. There is a total of 14 items listed here that we're going to walk through each of those in detail in a few moments, but you'll notice that a couple of them are noted as being reserved. Those several years ago had a compliance area included there, and many of those items have been moved elsewhere within the different compliance sections. So we'll walk through each of those areas in detail. And then finally, that last stage of the single audit is the reporting. Many of these items we've touched on. Will noted earlier the requirement to issue this in relation opinion on the CIFA, and then the yellow book and single audit reports, each which have sections regarding internal controls. And then there's also sections on compliance, both with laws and regulations and grants from the yellow book perspective and over the major programs that are tested as related to the single audit. Also, as part of the single audit report, and what I find, a really helpful document when I'm sharing the results with the board, is a summary schedule or a schedule of findings and question costs. This schedule provides just a good high-level summary of the audit results, both for the financial statements and for the federal award testing. Includes information on the type of opinion that's issued on each of those. Identifies whether there are any findings over the financial statements or federal awards. Also includes indication on any question costs greater than $25,000. So it's just a real good high-level summary of the audit results for the year. And there's also a summary schedule of prior audit findings included. Need to discuss any findings that were identified during the prior single audit, and then also share some information on whether those items have been corrected or the matters were repeated again in the current year's single audit report. There is also a requirement to submit a data collection form and reporting package. This is an online submission that really reports much of the same information that's included in the single audit report, but in a little bit different format. It's an online reporting The narrative on any findings is included here, as is narrative for the corrective action plan. The schedule of expenditures of federal award, that information is repeated here as well. And also, as part of that online submission, the financial statements are attached to that document as well. And so that's all publicly available information as part of that reporting package. And with that, we're going to take just a moment to answer polling question number 3. Just curious how many single audits that folks have had the pleasure to experience during their time. So we've referenced the compliance supplement a couple of times during the presentation. So we wanted to spend a few minutes walking through the details of that document. It is a document that is issued on an annual basis, not always as timely as what us auditors would prefer it was, but it does provide a lot of information then that the auditors will use as part of their testing on the single audits. But I think what's important just to note and to share is that there is discussion on auditee responsibilities as part of this document as well. So just would always encourage an entity that's undergoing a single audit to become familiar with this document and refer to some of that information as well. There are 7 main parts of the compliance supplement. We're going to walk through them in some detail. And then there's also a handful of appendices that are included as well. Some of them have some detailed information. Some of them are some links to other information that's available. But we're going to walk through the 7 parts and just kind of discuss what's included in the different components of the compliance supplement. So part 1 is the background, purpose, and applicability. And you'll note here that this indicates it's effective for June 30 of 2021 fiscal year end audits and later. I just noted that because this is a document that is updated on an annual basis. It's not something where the auditor looks to a document that was published 2 or 3 years ago. It is updated on an annual basis. It's important though for auditors to consider the fact that while it is updated annually, laws can change. There may be delays and new guidance that's issued. So the auditor just wants to be real careful that they're making sure that they have the most up-to-date and recent guidance to make sure that the compliance procedures that they're performing are current. As part of that document, it does note, and as you would look through the different programs that are included within this document, there are suggested audit procedures throughout. And just like the name or the title suggests, those are suggested, they're not required. There is auditor judgment that's utilized to determine the procedures that are going to be performed. And there may be procedures that the auditor determines is necessary to perform that are just based on the review of the grant agreement, even if they're not specifically laid out here in the compliance supplement. Part 2 is a matrix of compliance requirements. So this is the area where for each of the programs that are included in the compliance supplement identifies whether they are considered subject to audit or not. So there'll be a Y for those that are and an N for those compliance areas that are not subject to audit. It is possible, like we discussed earlier, that there may be an item that's noted as being applicable, but simply may not be applicable to that particular entity. Or again, the auditor may determine that it's not direct and material. So based on that auditor judgment, they will document why that particular area does not need to be tested. And it's also important to note that there can be areas that are not subject to audit. So the auditor is not going to be performing detailed testing on them, but that doesn't mean that they're not applicable to the auditee. Certainly the auditee, whether it's subject to audit or not, is going to want to understand those different compliance requirements and adhere to them. And it is possible, like the alert here notes at the top, that the requirements may change from year to year. So federal agencies may one year decide a particular compliance area needs to be tested, and the next year maybe not. So again, all the reason why the auditors need to make sure that they're using that most recent guidance. And here's an example just to put that into some perspective. You can see along the left side of the screen here, There's a couple of different programs that are listed. And then along the top and going to the right are the different compliance areas that we'll talk through. And you can see here, there's a Y or an N for those areas that the federal agencies have determined are subject to audit or not. And you can see there's a few that are bold and with yellow highlights that indicate those particular programs changed from the previously issued compliance supplement for being either applicable to not applicable or vice versa. So again, just reemphasizing the point that those compliance areas may change over time. And especially as all of the COVID-19 related funding has coming in, that has the potential to change those compliance areas that are subject to audit as well. Part 3 then contains some very general guidance that applies to all of the programs. So Part 4, especially that we'll look at in a little bit, is what's very program specific. But Part 3 focuses on some of the more general guidance that, across the board is going to be applicable. And again, this is where those 14 different compliance areas that we noted earlier is summarized. There's some more detail presented on each of those. So the first section then in Part 3 is activities allowed or unallowed. And as you might suspect, each grant program has their own sets of rules, has its own purpose. So this area is generally going to be unique to each federal program. They're going to have their own set of requirements for what types of activities can or cannot be conducted over the program. Type B is on allowable costs and cost principles. And this sort of focuses much on the information that Will shared earlier on the different federal cost principles that need to be adhered to. Those basic guidelines that the costs need to be reasonable and necessary, able to be allocated to the federal award, and then certainly, sufficiently documented. That's some of the general requirements here, but again, each program may have their own sets of additional discussion, similar to the allowable costs or the activities allowed and unallowed, which types of costs may be appropriate for a particular grant. Section C discusses the requirements for cash management. The general preference within the document, it notes that advance payments is sort of the preferred methodology when there are written procedures in place that help minimize the time between when the entity receives the funds from the federal government and then ultimately spends those funds. If there is that written procedure in place, then that's the general preference. But what we still very often still see is a lot of grants that function on the reimbursement method, used if there is no such policies that exist, when a particular grant may have a requirement or just be set up on the reimbursement method, or the grantee may request simply that it's their preference to go with that approach. So we still very commonly see as part of cash management many grants that operate still on the cost reimbursement basis. Section D is, of course, one of our personal favorites. It's the one that's reserved or set aside for now. There used to be some Davis-Bacon Act compliance requirements here. Unfortunately, that testing didn't go away completely. It was simply moved to another section. So that Section D is currently open for potential new compliance areas to be tested going forward. Section E is on eligibility. Again, as you probably would suspect, each grant is going to have its own set of rules as far as what eligibility determinations, who's eligible to receive benefits under the program. So Part 4 will have a lot of information for each particular program. Those eligibility considerations could be based on individuals, could be groups, and even subrecipients, which is another compliance area that we'll look at as well. So again, a good area to refer to Part 4 and 5 into the general grant agreement for what the auditor is going to test regarding eligibility. There are certain grants that allow for the purchase of equipment or real property, which is Section F. It's important to note that title to any equipment that's purchased with federal funds does not revert back to the federal government. It does in fact stay with that non-federal entity that's making that purchase. but there are some strings attached to the purchase of that equipment or real property. They do need to maintain property records, encourage auditees to keep separately noted in their capital asset records which items were purchased with federal funds. Needs to be an inventory of those capital assets taken at least every 2 years. And then in the case that equipment would be sold, if there are proceeds from the sale, the auditee may need to work with the grantor agency for how they're to utilize those funds, whether they're to be reinvested in the program or potentially returned to the federal government. Section G then is on matching level of effort and earmarking. This is, again, another area that's going to be pretty unique to each federal program. From a matching perspective, a grant may require some local contributions or some in-kind contributions so that there's some participation in the program outside of just that federal funding. There may be a level of effort discussion on whether the grant funds can supplement versus supplant. So that's an area to refer to the particular grant agreement. And then for earmarking, there may be a requirement that a particular dollar amount or percentage of those federal funds be used for a specific purpose. So again, refer to the particular grant agreement to see if there's any such requirements. Section H is on period of performance. Typically, a grant will specify a period during which the funds can be spent. And so the auditor is going to make sure that those funds were spent during that time frame. There is a little bit of grace, though, for the ultimate liquidation of those liabilities, which needs to take place within 90 days of the end of the funding period. Seems to be, there we go. So section I then is on procurement suspension and debarment. I think what's really important to note here is that, you know, the federal government did identify some thresholds for purchases, but it's very important that the government follows their own local practices because in many instances, they're going to be more restrictive than what those federal rules are. So, you know, just because you're spending federal funds doesn't mean that the entity can ignore their own local practices. If they are in fact more restrictive, certainly they're going to want to make sure that they're following those in addition to the federal rules. On the suspension and debarment side, when there are procurement contracts for goods or services in excess of 25,000 and for subawards that are issued, the entity is going to want to make sure that those do not take place with entities that are on a blacklist. There's a website here where you can refer to that listing of excluded parties. So certainly that's something that we would always encourage clients to maintain documentation to support the fact that they've made those checks for suspension and debarment. Section J on program income is another area where each program may operate a little bit differently as far as whether they're generating program income as part of the grant. There may be fees that are charged or interest that's earned. So again, this is another area where each grant program may have different rules for how that program income can be utilized. Section K is another one that's been essentially moved elsewhere, so it's tentatively open. Section L on reporting talks about the required use of standard OMB forms. The two that are noted here are ones that we see pretty commonly. But again, this is an area where a particular program may have its own set of reporting requirements that may be discussed within Part 4 and 5. Section M then is on subrecipient monitoring. The entity that is passing through funds to another entity does have a number of responsibilities related to the pass-through of those funds. They need to be able to share, you know, some information on the federal award and the assistance listing number. But then they also need to perform monitoring procedures over those entities that they pass funds through to. And they really need to perform a risk assessment process to determine exactly what procedures need to be performed. So there may be an entity that's received federal funds in the past and has a single audit report available. So they may want to consider whether there were any findings in prior year single audit reports. So based on that, risk assessment process, the entity, the pass-through entity will decide which monitoring procedures they want to perform. They may want to make an on-site visit to make sure everything is operating appropriately. They may simply determine that a review of the single audit report is appropriate, but those monitoring procedures should really be based on the risk assessment process that the pass-through entity conducts. And even there are instances where a pass-through may be made to a for-profit subrecipient. They may not have a single audit report, but certainly the pass-through entity will want to make sure that they're complying with the different rules and regulations as well. And then finally, special tests and provisions is the last of the compliance areas, sort of a catch-all for anything that the federal agencies want looked at that are not touched on within the other compliance areas. So again, this is an area that's going to be unique to each of the specific programs. So part 4, then, we've referred to several times, details out those specific requirements that the federal agencies have identified for needing to be tested. It includes the compliance requirements, audit objectives, and suggested audit procedures for about 200 individual programs, which sounds like a lot until you consider the fact that there are more than 2,000 assistance listing numbers that are currently available. So there are for many programs, and certainly the more significant programs do have this information, but there's additional areas within the compliance supplement that talk about what the auditor should do if there is not this information for a particular program that they're needing to test. Some agencies also have identified a cross-cutting section so there may be multiple grants that have the same testing requirements. So that's sort of listed in a general information here in part 4, rather than being repeated for each of the specific programs. When we were talking about the major program determination earlier, we referenced clusters. Again, what these are assistance listing numbers that are really treated like they are a single program for purposes of that major program determination and testing of the single audit. They're just so similar in nature that the agencies have determined that those will all be tested and considered together. Excuse me. And one example of that is the student financial assistance cluster. That's one that we see pretty commonly with institutions of higher education. There's just a handful of different assistance listing numbers that make up that particular cluster. Part 6 discusses internal control. Will touched on this earlier, the different components and the different principles. So again, that's an area where would always encourage auditees to refer to for the additional information there on the considerations regarding internal controls. Part 7 provides some general guidance for any programs that are not included in the compliance supplement. Again, I mentioned there's about 200 individual programs that are included, but what should the auditor do if they are testing a program that does not have that detail? And that's where part 7 comes in. It is just a really helpful reference. Oftentimes the auditor is going to refer to the grant agreement to see what compliance areas are discussed within that particular document to determine the appropriate audit procedures. And with that, we'll take just a second for polling question number 4. So wanted to touch also just a minute on some of our expectations with the 2021 compliance supplement. As we experienced for 2020, we are expecting at least one addendum to the supplement that will come sometime later. It's the initial issued supplement is not going to contain information on all of these new rescue plan funded programs. So there's likely to be at least one, if not more, addendums issued related to those programs. It's possible that there may be programs with both CARES and ARPA funding included, and potentially with different testing requirements. So all of that is a little bit to be determined at this point. So we're all very anxious to see what information is going to be included when the compliance supplement is ultimately issued. There's also discussion on programs that are considered higher risk. This goes back to that major program determination that we talked about earlier for some of the criteria for whether a program is considered high risk or not. The thought process is that for all new programs or clusters that are established under the rescue plan, that those will be considered higher risk. And then also federal agencies have the option to also identify programs as being of higher risk. So there's a number of them that are noted here and on this following slide, which are likely to be considered higher risk. And certainly then that makes them more likely to be subject to audit with that major program determination. There's also likely to be within the compliance supplement a requirement for the auditors to perform testing regarding the Federal Funding Accountability and Transparency Act, or FFATA. This was something auditors needed to test it a few years ago that went away, and it seems that it's coming back again. This is a reporting that's required when a prime or direct recipient of federal funds makes subawards to other entities of $25,000 or more. In that case, there is some reporting that needs to take place. And again, this is an area that the auditors will be starting to look at going forward as well. And then on the data collection form, we touched on this in the reporting section earlier, but just a couple of additional notes here. Again, this is required for all entities that have a single audit. It's normally due within 9 months after the end of the fiscal year, or 30 days after receipt of the audit report, if that's available earlier. There have been extensions that have been issued, again, related to the COVID pandemic. There's been some flexibility there on timing. So while the normal requirement is 9 months, if you're pushing up against that deadline, there is a good possibility that there are extensions that have been granted. Again, this is a document that's entirely submitted electronically, along with a copy of the financial statements, and will be certified by both the auditor and the auditee regarding the completeness and the accuracy of the information included within that document. And with that, I'm going to turn things over to Doug, and Doug's going to share some additional information on COVID-19 funding and some of the more significant changes we've all seen over the past year or so.
Thanks, Paul. All right, we're going to touch on some of the main programs, some of the bigger programs that have been developed through the federal government for funding related to the pandemic. This slide, you can see the first one, the CARES Act, was established back in March of 2020. So this is the first one that was put out and provided funding to multiple different types of entities. It's a pretty significant amount of funding. It was broken down into the 4 different categories you can see there. We have the Coronavirus Relief Fund, the Provider Relief Fund, Educational Stabilization Fund, and Paycheck Protection Program. And then later on in December of 2020, there was a Relief Supplemental Appropriations Act in December 2020 that provided some emergency rental assistance as well as some shuttered venue operators grants. And then the most recent one in March of 2021 is ARPA, the American Rescue Plan Act. This is providing a significant amount of funding to local and state governments under the Local Government Fiscal Recovery Fund, then also provides some additional emergency rental assistance and some additional educational stabilization fund. And we'll talk about each of these a little bit on the slides going forward. So the first one, the CRF, the Coronavirus Relief Fund, provided $150 billion to states, eligible units of local governments, so those that had populations of greater than $500,000. Any local governments that had populations under that, there were provided funding through the state the allocation to the state. District of Columbia was eligible, U.S. territories, as well as tribal governments. So Treasury issued a lot of guidance, and it was coming out fast and furious there at the beginning, and things were changing, and they were trying to keep it updated with FAQs and different guidance that they posted to their website. It was updated throughout the year. It was finally, I guess, finalized, if you will, and codified in the Federal Register on January 15th of 2021. So we went from March of 2020, till January 15th, 2021 with guidance that was changing regularly. So we're trying to stay up on that and ensure that costs were expended as intended under the grant document. There is a link to the slides that when you have the slides available to you, where you can find this codification of the guidance and FAQs on the Treasury's website. FAQs, so the frequently asked questions are exactly as you would have saw them on the Treasury website. They just posted them into the Federal Register to make them official. Only selected elements of the uniform guidance apply. We'll talk about this a little bit later, but the Treasury does not consider the CRF to be a grant, but they do consider it to be other federal financial assistance. And therefore, because it is considered financial assistance, uniform guidance, as well as single audits do apply, but not all sections of the uniform guidance will apply because it's not considered a grant. And we'll talk about that in just a little bit more. So eligible uses of funds. Treasury tried to make this fairly easy for people to find expenditures and the way to expend the funds for allowable purposes. The CARES Act provided the payments from the fund may only be used to cover costs that are necessary expenditures related to the public health emergency of COVID-19, were not accounted for in the budget that was most recently adopted and approved as of March 27, 2020 by the local government, and were incurred during the period that begins on March 1st of 2020 and initially ended on December 30th, 2020. Not sure why they picked December 30th, but I think it was on December 27th, they extended that to December 31st to give you an extra day to spend those funds. So we'll go through a little bit of the, describe some of the requirements on the previous slides. So necessary due to the pandemic, they're talking about expenditures that needed to be incurred to meet the requirements of the public health emergency and for actions that were taken and needed to be taken to respond to the public health emergency. Then the guidance also talks about necessary due to the pandemic. So the Treasury understands the term necessary broadly to mean that the expenditure is reasonably necessary for its intended use and the reasonable judgment of the government officials responsible for spending the funds. So again, not real clear definition there in the codified guidance by the Treasury, but it will get a little more clear as we move along in the slides. So one of the criteria was not accounted for in the most recently approved budget. So cost meets this requirement if either the cost cannot lawfully be funded using a line item, allotment, or allocation within the budget. So that'd be the budget that was adopted prior to March 27th, 2020. Or the cost is for a substantially different use from any expected use of funds in such a line item, allotment, or allocation. So as I mentioned earlier, we're required to expend the funds between March 1st of 2020 and December 31st of 2021. One important thing to note here is the revised end date does not automatically change pass-through grantor requirements. So for example, the state of Michigan received the direct funding from the federal government, and then they created 100 different programs and then redistributed those funds out to the local units of government, school districts, and that type of thing. So if the state didn't extend the expenditure date through 12/31, then the pass-through entity would have been required to meet the 12/30 deadline. But the state, I believe, for most of the programs, if not all of them, did follow with the federal guidance and extended their deadlines through 12/31/2020 as well. So some examples of some eligible expenditures, medical expenses. So these would be things such as establishing temporary medical facilities, costs for testing, emergency response, the cost for implementing telemedicine, those types of expenses, public health expenses such as communication and enforcement, purchase and distribution of medical or protective equipment, protective supplies, services such as disinfecting of public areas and that type of thing. Payroll for employees substantially dedicated to mitigating or responding to COVID-19 public health emergency. That included public safety personnel, public health personnel, as well as human services. And we'll talk about that on a future slide in a little more detail. The next one, actions to facilitate compliance with COVID-19 related public health measures. Things such as food delivery to senior citizens, distance learning for schools, including technology needed to implement that distance learning, improve technology and infrastructure to allow for telework capabilities, certain costs of paid sick and leave, family leave, maintaining prisons, county jails in order to comply with the requirements of public health precautions. The next was provision of economic support in connection with COVID-19. So these are things such as grants to small businesses for business interruption when the businesses are required to be closed or not allowed to be at full capacity, and then some unemployment costs as well. And then they threw in this any other category that really leaves it wide open of what could be spent. But it does have to be expenses necessary to the function of the government that satisfy the CRF eligibility criteria. So still have to consider the bullet points above, but this isn't intended to be an exhaustive list of what could be allowable. Some examples of ineligible expenditures. The state share of Medicaid was not allowed to be covered by CRF funds. Damages that were covered by insurance, payroll for employees not substantially dedicated to mitigating or responding to COVID-19, expenses reimbursed by any other federal program. So, one thing to keep in mind is you're getting a lot of different funds from a lot of different sources, and you don't want to, what we call double dip. You don't want to cover the same expense by two different revenue sources. That's not going to be allowable in any of these programs. So it's important that, as Paul noted in his presentation, is that you specifically identify the expenses for each of these programs. So you're ensuring you're not using the same expense for two different revenue sources. Some reimbursement to donors for donated items or services, and then bonuses are not allowed other than hazard pay or overtime. So, for example, one of the programs the state of Michigan created for the local units of government was a hazard pay, and you could pay up to $1,000 per person, per employee for hazard pay. And that was one of the programs that was allowable, but just general bonuses are not allowable through this program. So then the Treasury, after they issued all this information and details about the program, trying to make things a little more easier, a little easier to spend the funds and to allow the local units to, mitigate the effects of the pandemic. They created several different things they call administrative convenience. So the first one is the entire payroll cost of an employee whose time is substantially dedicated to mitigating or responding to COVID-19 public health emergency is eligible, provided that it was before December 31st, 2021. So what that means is that if somebody was substantially dedicated, we talked about that a little bit earlier, and we'll have another slide on that again here coming up. But if they're substantially dedicated, you can apply their entire payroll costs. So that's payroll, benefits, pension costs, that type of thing. You can apply all that to the program, even though they weren't 100% dedicated. The other option is the employer can also track the time spent by employees, so that track their specific hours that they spent on COVID-19 and apply the fund payments on that basis. But would have to do so consistently within the relevant agency or department. So what we saw a lot was, most places looked at the substantially dedicated criteria and tried to meet that instead of trying to track what was specific COVID-19 related, just because it was a lot easier. So Treasury did not develop a precise definition of what substantially dedicated means. They want you to figure it out, right? So given that there is not a precise way to define this term across different employment types, the relevant unit of government should maintain documentation of the substantially dedicated conclusion with respect to its employees. So that's important from an audit perspective, is that you have this documentation of why management or the board or the council decided that these employees were substantially dedicated. So good documentation will be very important here. Whoops. And then the Treasury guidance goes on to say that because of the particular importance of public health and public safety workers to state, local, and tribal government, Treasury's provided another administrative accommodation that these state, local, and tribal governments may presume that public health and public safety employees meet the substantially dedicated test unless the chief executive or equivalent of the relevant government determines that specific circumstances indicate otherwise. So what this means is that the Treasury has guidance that says, for your sheriff's department, your police department, your 911, public health department, all of these employees can be considered substantially dedicated to the COVID-19 response without anything further, unless the chief executive, so that would be the board or the city manager, county administrator, that type of thing, determined that there were some other circumstances that would indicate otherwise. So what is included in public safety employees? Well, like I mentioned, it's all the police officers, sheriffs, deputy sheriffs, firefighters, emergency medical responders, correctional officers, and those who directly support such employees, such as dispatchers and supervisory personnel. And then same thing, what includes public health employees? You're going to include all employees that are providing medical or other health services to patients and supervisory personnel, including medical staff assigned to schools, prisons, other institutions, as well as other support service personnel for patient care, as well as any employees of the public health departments directly engaged in matters related to public health and related supervisory personnel. So then some more administrative convenience. I like this. We should do this on more of the programs, but specific for schools here, the Treasury created a program for schools and said, okay, here's your allotment of funds to your school district, and you can spend up to $500 per student and not provide any sort of documentation of what that funds were used for. So they're assuming that each school district spent $500 per student on allowable uses, but you don't need to document that or support that from the state level or from an audit perspective. Now, if you're going to spend more than the $500 per student, anything over above that $500 limit would be required to have support and documentation of what it was expended on. Oops. So if you remember one of my earlier slides, I talked about not all parts of the uniform guidance are applicable to this funding because this is not considered a grant from the Treasury's perspective. It's considered financial federal assistance. So these payments are only subject to certain requirements in uniform guidance. The first one is the internal controls. You always have to have internal controls whenever you're spending federal funds. Subrecipient monitoring and management. So if you are receiving these funds and passing them on to someone else, you are required to do that monitoring of those subrecipients, as Paul indicated in his presentation. And then subpart F, they are required to be audited under the single audit process. Subpart E, though, the federal cost principles do not apply here. So that's an important thing to remember. So I mentioned, sorry, these funds are not administered as part of a traditional grant program. So because of that, the section of the uniform guidance that applies to indirect costs do not apply to the CRF funding. So you can't, if you have an indirect cost rate that you apply to your other federal grants, you're not allowed to charge that indirect cost rate to the CRF program. Now you may apply administrative costs, so such as your single audit fee, that can be applied to the CRF program. An individual's time that is more administrative in nature, such as helping to run the program, administer the program, that type of thing, their time can be charged to the program, but you cannot just apply your normal indirect cost rate to this program. So reporting requirements, the Treasury set up a new system of grant solutions. Because this is a separate grant reporting system the Treasury set up, the FFATA that Paul mentioned earlier does not apply to CRF. So if you did receive and pass through $25,000 or more to someone else, you're not subject to the FFATA reporting requirements. So the Treasury OIG provided some guidance on ineligible expenditures, and that the Office of Inspector General does have the ability to recoup funds for non-compliant expenditures. However, they have provided like a replacement. So if you claimed expenditures and later found out they were not allowable expenditures, you can say, okay, I'm going to throw those expenditures out. I'm going to claim this bucket of eligible expenditures that haven't been covered by another funding source. So that's something relatively new in this guidance, and it's important because some of the guidance has changed over time. You want to make sure that you are following the most recent guidance. And if you did apply some costs that are now not considered eligible, you do have that opportunity to replace those costs and not send the funds back to Treasury due to the ineligible costs that originally were applied for. Okay, it brings us to polling question number 5. Let's take a minute for you to answer that. I hope the answer to that one is yes, everybody is still here. So we'll continue moving on. Oops. Okay, so a new term has come out with some of this new funding, and there's been a discrepancy about what is the difference between a subrecipient and what's the difference between with a beneficiary. So two different types of recipients. They are required to have different monitoring and that type of thing. So the Treasury FAQs, the OIG, as well as uniform guidance, have not really clearly identified what a beneficiary is. So we're going to take a look at that, of what the differences are. So within the uniform guidance, it describes a subrecipient, means a non-federal entity that receives an award from a pass-through entity to carry out part of a federal program. So that means that the pass-through entity is actually going to run a program on behalf of the entity that's passing through the funds. It does not include an individual that is a beneficiary of the program. So somebody that's receiving the benefit of a program is not considered a subrecipient. And a subrecipient may also be a recipient of other federal awards directly from a federal awarding agency. So you can be a direct recipient, you can be a subrecipient, or you could be a beneficiary. from different grants and programs, depending on how they're structured. The uniform guidance definition is not technically applicable because, like we said, that section of the uniform guidance doesn't apply to CRF, but it gives us some background and information of what the uniform guidance considers a subrecipient. So differences between a subrecipient and a beneficiary for purposes of the single audit and the audit requirements is subrecipients would not include individuals and organizations that are beneficiaries of an assistance program established using payments from the fund. So the Single Audit Act and 2 CFR Part 200 Subpart F regarding audit requirements do not apply to subrecipients or to beneficiaries. So how do we determine which we might be from the funding source that we receive? So it comes down to, are you actually helping to run a program on behalf of the pass-through entity, or are you just receiving funds and you're considered the ultimate end user of those funds? That's really the underlying difference between the two. When it comes to reporting on grant solutions, there's no separate category for beneficiaries. So what this is saying, the slide saying, is anything that was given to a beneficiary is reported in the subrecipient column or category when you're reporting on grant solutions. So some things to think about for the differences. Like I mentioned, subrecipients run federal programs. They're required to comply with certain compliance requirements and meet certain objectives. Beneficiaries do not have those requirements. Beneficiaries are not subject to subrecipient monitoring or the single audit process. So don't have to worry about that if you've been identified as a beneficiary. As I mentioned earlier, a non-federal entity can be a subrecipient for some CRF programs and a beneficiary for others. And you may be thinking, well, how do we determine what we are? The only one that can make this determination is the pass-through entity. So you can't make the determination yourself. It has to be from the pass-through entity that they identify you as either a subrecipient or beneficiary, depending on their criteria that they are using. So if you're unsure, I recommend you talk to the entity that passed the funds through to you to help you identify which other categories you would fall under. So next, the Provider Relief Fund. This was some funding that was provided to the hospitals, some medical care facilities, nursing homes, that type of thing. It was all sent out very quickly based on Medicaid cost reporting, and that type of thing was the initial payment was based on that. And this one, the Department of Health and Human Services has been very quick to change the guidance on this program on a regular basis. They have a set of FAQs, frequently asked questions, on their website that they update very often, and sometimes very significant updates. And the most recent one was either last Thursday or Friday. They updated 2 FAQs that really dictate of when you can put this type of funding on your CFA. So the information in this chart was based on the 2020 compliance supplement addendum that dictated when you are going to report these costs on the CFA. And this Provider Relief Fund is added a new caveat to this, where the CFA is your schedule of expenditures of federal awards, while Provider Relief Funds allowed for a replacement of revenue loss. So that's not an expenditure yet. They're still expecting it to show up on your schedule of expenditures of federal awards. So the HHS reporting portal, which was an important part of this program, was supposed to go online early January. They finally got it online. I think it was July 1st of 2021. So that entities that received this funding could actually go in and do the necessary reporting. And at this point, all single audits are on hold pending the reporting to that portal, because that's an important part of the single audit. So the AICPA has recommended that no single audits that have provider relief funds on them get issued prior to that portal being up and running, and the entity doing the necessary reporting for their funds. So one of the FAQs that were issued last week really solidified this slide and the next slide that we initially had marked as draft here. So this is going to contradict what was in the 2020 compliance supplement addendum of when things get reported on the CIFA. And what HHS is trying to do here, which again is something new and different that I've never seen before, they're trying to align of the deadline to use the funds and the reporting period to be when things show up on the entity's CIFA. So the PRF was distributed in 4 different periods. You can see the 4 periods there and the dates that the distributions were made. So if you received funds in the first period of distribution, so April 10th, 2020 through June 30, 2020, you had to use all those funds by June 30th, 2021. And then the reporting time period started on 7/1 when the portal opened, and you have to have everything in there and reported by September 30th, and then so on with the different reporting periods. So if we look at the FAQ that was issued on this past week, Thursday, Friday, what that's going to show you is they are now saying that even though the 2020 compliance supplement said that you should report PRF funds on your December 31st, 2020 schedule of federal awards, they're saying, nope, now that's not correct. We want to wait and include all those PRF funds on one CIFA. So therefore, if you're period 1, you used your funds through 6/30, a lot of those funds could have been used by December 31st, 2020. You're not allowed to put that on your 2020 CIFA. You have to wait and you put the whole amount expended for period 1 on your December 31st, 2021 CIFA. So that's a pretty significant change from the guidance that was issued in the 2020 compliance supplement to what HHS provided just at the end of last week. So you'll want to make sure you discuss with your auditors about timing of putting this type of funding on your CIFA, as well as review the updated FAQs last week. There were some others, but to me, those were the 2 most important ones that were added. So this just looks at when you're going to report stuff. So like I said, so fiscal years between March 31st, 2020 and March 31st, 2021, you're not going to report any expenditures on your CIFA. Recipients with fiscal years on June 30, 2021 or before December 31st should include the expenditures from the period 1 PRF report. And then for recipients with fiscal year December 31, 2021 should include in the CIFA the expenditures in both period 1 and period 2. And as you remember on the previous slide, period 2, the deadline to use funds was 12/31/21. So that's why they're grouping period 1 and period 2 together, because they're trying to align what's reported on the CIFA to the deadline to use funds. So very different from what we're expecting or what we have historically saw, where you report expenditures in the period that you expended them. This is asking for something different, and it's all new. And I expect that there will be some more guidance coming out from OMB in the 2021 compliance supplement, as well as probably the AICPA, I would suspect. The next section is Education Stabilization Fund. U.S. Department of Education, not sure what they're trying to do here. They used the CFDA or the assistance number and added an alpha character at the end and to create different programs. And I don't know if their intent was that each of these programs would be considered a separate program and audited separately, but the alpha character at the end does not dictate how these programs get audited. So the CFDA number 84.425, A, C, D, and H are all going to be considered one program and audited as one program. Same thing with the next section with the HERF. All those different alpha characters are not going to mean anything when it comes to your single audit and how the auditor should be looking at your major program. They should be looking at all of these with the alpha characters A through P as one entire program, and all of this would have to be audited as one program. So Paul touched on the 2021 compliance supplement. Again, this is draft. We really don't know. We're just expecting, but we expect part 1 and part 2 to include ARPA funding. We don't expect part 1 to be updated for ARPA at the time of the initial release, so we expect that to be in a later addendum. And then part 2, we are expecting that to be released with the initial compliance supplement and have the guidance related to those programs. So what's coming next? Well, the CRF as well as the other CARES Act programs will continue to be spent throughout 2021. Pass-through entities will continue doing subrecipient monitoring. So a lot of you probably have been contacted by the state. The state of Michigan is doing a lot of subrecipient monitoring through these programs. And good news is there's a lot more money coming. So we'll look at the next slide. Some of the new money that's coming is the Fiscal Recovery Fund. So this is a huge program, a lot bigger than the CRF was. This is going to include $350 billion to states, District of Columbia, all the counties, and then metropolitan cities with populations of greater than 50,000 people, with tribal governments and U.S. territories included there as well. So those top 5 categories will receive direct funding from the federal government, and they already did. I think it was May, June, they received their first payment, and it would have been 50% of the estimated amount that they're going to receive. The last category, the non-entitlement units of local governments. So doesn't mean you're not entitled to these fundings, but you're going to get it through a pass-through entity. So in Michigan, the state of Michigan is passing through money to all of the non-entitlement or the non-metropolitan cities with populations of under $50,000. So the state's reporting portal just opened up early July, where each local government can go in and request their payment, fill out the application. It's going to go through a review process, and if everything's good and everything matches in the system, the first payment will be sent out by the state of Michigan for the 50% of the expected total. Oops. So as I mentioned, this was paid 50% in May for everyone except for the non-entitled communities. That 50% will come in probably early August to late August, depending on when you apply through the state's website to get your payment. And then the remaining 50% will come in the next fiscal year. This is all relatively new stuff. They did issue what's called an interim final rule, which kind of seems silly, but it's not their final, but it's what they think is going to be final. The public comment closed on that at the end of last week, so we're expecting to see the final rule, I hope soon. Some of the things in the interim final rule, the funds must be obligated by December 31st, 2024. So there's a difference between obligated and actually expended. That give you some extra time to expend it, but it does have to be obligated by that date. May be used to support public health expenditures, address negative economic impacts of the pandemic, replace lost public sector revenue. So here again is that new concept of replacing lost revenue. It is important to remember that, you know, if you apply these funds to lost revenue, it's not just free and clear revenue. You still need to take that those funds and spend them under an allowable expenditure in this program. So a little unique twist to that. You can provide some premium pay to essential workers and invest in water, sewer, and broadband infrastructure. There is a cap. I know Treasury provided what they expected everybody's payments to be a while back. They listed every entity and how much they're expected to get, but it is going to be capped at, I believe it's 75% of your annual budget. And just yesterday, there's a link at the bottom of this slide. Treasury provided some FAQs finally related to this program. So we weren't able to go through them in detail and get some additional slides on this, because like I say, they're just published yesterday. But there's a link there for you to take a look at that. Some very good information about how you identify your lost revenue and how that can be calculated, what these funds can be used on. A lot of the stuff that was eligible under the CRF is going to be most likely eligible under this program as well. So that link's going to be a really good guidance for right now until the final rule comes out, and will most likely solidify some of this information. The last few remaining slides are just some links to some important resources that you can refer to. We had links throughout the slides on different things you can click on to get to the resources and that type of thing. So I encourage everybody to use these resources as necessary as you're going through and working through these programs. Okay, that brings us to our last and final polling question number 6. And then I will turn it back over to Ashley.
Thank you so much, Doug. This concludes today's program. Thank you for joining us. With respect to people's time, we will be reaching out directly to answer all of the questions that were submitted and unanswered. If you would like to learn more, please visit Rehmann's website at www.rehmann.com/government-resources. You can also email us at publicsector@rehmann.com. Thank you so much and have a great rest of the day.